My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
All right, guys, welcome to Property Profits Podcast. I'm your host, Bryce Kaminsky, filling in for Dave Dubois. And have you ever wondered how to leverage relationships that can really supercharge your real estate investments? Well, today, my guest, Marc Amyot, a seasoned investor from Ottawa, has mastered this art and is here to share his secrets. Marc, welcome to the show. Great to have you here.
Thank you very much. Very happy to be here as well.
So could you walk us through your journey in the real estate investment, from your first fix and flip in Vancouver, now leading you to these larger developments in Ottawa? What got you started in this whole real estate idea?
Yeah, I feel like I'm a late bloomer when it came to it. I always wanted to do real estate. When I was 18, I was telling my dad, hey, I wanted to buy the triplex my grandparents used to live in when they moved out.
Yeah.
And I got a solid no, that was not going to happen.
Yeah, they're not
So,
having it, eh?
No, so they were not very supportive at the time. So that being said, fast forward a decade, and I moved to Vancouver. Eventually, I really wanted to get started. So a friend of mine and myself did our first flip. So we took an old property. What was supposed to be a budget of $30,000 turned out to be 100. We still made a decent profit because the buyer was right, but it's been a learning curve, that was for sure. And that was back in 2014, I think.
Nice.
Then I moved to Ottawa. I started positioning myself. I bought a few rentals, kept educating myself. I eventually took coaching from somebody called Christian Spielvogel, which really imparted onto me a lot of very valuable business lessons, and shifted my mind a lot as well. And then from there, I bought more distress asset that I repossessioned. So we bought like smaller properties, like duplex, triplex, that we either added units or that were completely dilapidated and needed major renovations. As we build our team, because we spent probably 2 years straight renovating different units. And the team was getting more and more efficient and was working really well, to the point where team members were coming to me and be like, I'll take my electrician, for example, would come to me and be like, hey, Marc, I don't know if you know, but the site always goes very well. And it's not like that on every job. And it's not a comment that I was seeking or expecting, but it got me thinking, and I'm like, okay, maybe I'm sitting on something here. So from there, I started my own renovation company, and I'm a big fan of the concept of I'd rather own half a watermelon than a full blueberry. So
Yeah.
I gave a good portion of business to two of my main carpenters. So and from there we got a successful business that's working well, and that's although it's not related directly to my real estate investment, it's really good as part of an ecosystem to own a renovation company, right? So when there's problems, I can get things fixed fairly easily and at decent cost. So that was very good. From there, I started to continue to scale. Eventually, I got an opportunity to buy 2 different lots in 2 different locations in Ottawa. Both of them already zoned to accept bigger building. As part of all those new plans that are coming up across Canada and all those different cities, and it's not any different in Ottawa. So on one of them now we're building a 20-unit building, and on the other one we're looking at this time to build a 30-unit building.
Nice.
So yeah.
Building that sort of like new construction on that scale's got to be challenging. Are you taking advantage of these government programs to facilitate these constructions, or who is coming in on like the limited partner side or the partnership side to kind of facilitate these larger deals?
Yeah, I think we almost have to take it a step back. Even we have to go back a little more, I think. In order to do things at that size, especially if you have not done things at that size before, is you want to make sure that on your team, on your active team, you have people who's done it several times before.
Okay.
As such, I've partnered up. I have Victor Minash and his team at Wise Street Capital are working with me on
Yeah.
this.
Yeah.
Victor's done numbers of
Tons.
builds across the U.S. and some in Canada, so his team is very well positioned to assist in making things right.
Mm-hmm.
The thing is, if you don't spend several years cultivating relationship, you don't know who you can trust. You can see, and we see it a lot right now. Like you can see a lot of people on stage at different platform across Canada that thinking they're very successful, and the next thing you know is those people are either don't have the sets of skills that they pretended to have,
Mm-hmm.
or the worst case is they were lying, and now it's they're bankrupting.
Mm-hmm. Mm-hmm.
So so I think you really have. Where I'm going with this is you really have to be in the industry for some time and really cultivate quality relationship
Mm-hmm.
in order to be able to build the right team. Once you have the right team in place, now you're looking at the capital raise side of thing to get those building done and the incentive from the government. Of course, like many others, we're taking advantage of the CMHC MLI Select program. To be completely honest, if that program wasn't there, there's nothing that'd be getting built.
Yeah.
There's
Yeah.
nobody in Canada that could make the numbers work if that wasn't from the fact that now you can put them on 50 years.
Yeah. And that was one thing that we were always sitting around, especially 2022, 2023. We're sitting around going like, okay, let me do the numbers. Oh, it doesn't, it doesn't make sense to build. So we're just not going to do that. And at least now, it's starting to make sense, but like you're saying, only because of the program. So good that the program exists. I just hope that because these things take time to build, right? And so are the numbers going to be there? Is it going to be there when it's all done? Are you concerned that if we get a financial shift in the government that program is going to be reevaluated, as they say, on the federal level, or is it pretty much set that once you get it, you got it?
That's a good question. So, I mean, the programs, you can never trust anything long term,
Yeah,
I don't think it'll disappear in 6 months, but is it going to be there
yeah,
in 10 years? I can't say
no,
that.
probably not.
That being said, interestingly enough, the program is constantly changing.
Yeah,
One of the things you can look at is uh, the way to qualify to certain aspect of the program has already started to change.
yeah,
So it's also very they can very arbitrarily change some rules about the program. So you always have to make sure that you have a team member that's looking at it at all time, and because that's going to have a major impact on your development. That being
staying up to
said,
date.
yeah, exactly. So that being said, it's like anything else. If you start a project of that size, you have to make sure you have contingency. And I mean,
Mhm.
not a $50,000 contingency. That's not
No.
going to cut it. People think they're going to build something like that with a float. And just for the listener, a float is the amount of capital you use to build the project or the property where, you're going to pay your trades. And eventually the bank's going to, through a construction financing, the bank's going to give you some money back. And then
Hmm.
that amount of money that goes back and forth is the float.
Hmm.
So they think they're going to build millions of dollar project with a $50,000 float. And it's like, that's just not realistic.
Yeah.
So so that would you build contingency, make for bigger capital raise, but I'd rather over raise and make a little less money, but ensure that the project is de-risk as much as it can be, rather than trying to essentially shave every dollar I can in order to increase
Hmm.
profits. My number one criteria at all time is to de-risk. You know, Once we've de-risked as much as we can do, then we're looking at, okay, is the project still financially viable? And if it is, then we go ahead.
So when you look at everything you've done in real estate, I guess it's been a decade now, 2014, 2024. What would you say your unfair advantage is? What comes easy to you that other people might find difficult to do?
Building trust. That's the one thing. And interestingly enough, I've only realized that recently where a friend of mine was doing an exercise with me where he goes, have you noticed how, you're capable of building extremely high quality relationship with pretty much anybody? in relatively short amount of time. And then those are usually very fruitful and leads to something. And I was like,
Mm-hmm.
you know what? I've never looked at it this way, because I don't do it for when I cultivate a relationship. I don't do it with any um, end games or any end goals. I do it because I value the person, I value who they are and what they do. If
Mm-hmm.
that leads to something, that's just bonus. I'm a huge proponent, and the more you give, at some point or another, it comes back to you. And I find that in the last, especially the last 6 years, I've been extremely lucky and privileged to have the chance to be around some absolutely incredible people. And they've given me so much. And, from their time to their trust, and all kind of advice or partnership. And that really led me to where I am now. And that made me the investors that I am today, which allow me in exchange now to help other people. So it's been a fantastic journey. And I think unfair advantage by far, it's my ability to build meaningful connection and trust within partnerships.
Well, and I like what you said there. You go into it without looking for something so much as you're into it for, actually building that relationship instead of like, I'm going to talk to this person because I know they have money, or I'm going to talk to this carpenter because I know they have, industry connections or something. It's like, I'm going to talk to this person for the sake of talking to this person. And if there's something we can do together, that would be awesome too. So, very interesting if people are listening along. So capital raising, it's always a significant challenge, especially when you're talking about seven-figure capital. What strategies have you found to be effective in overcoming those common hurdles, especially for these larger development projects?
Yeah, I think it's the biggest point is credibility. There's a lot of people that wants to get in the development space right now.
Mhm.
They have no experience, or they have no track records.
Yeah.
Um, so I hardly see. It's a much bigger challenge if you're in that position to try to convince somebody that you're going to bring a development to fruition with a
Hmm.
team that's never been through that. So that's why through developing quality relationship, having a team help me or assist me in building a team that now has that track record, that can say, yeah, we've done this time and time again. So
Hmm.
then the people are a lot more comfortable when they see who you are as well as who's on your team, because nobody's a one man show.
Hmm.
There's just none of that. So when people recognize you and the other members of your team as being highly reliable, people that care, and with a high level of and they can trust you. That's a recipe for success for your capital raise, and at the same time, it's the recipe for success for the project, which is to the benefit of your investors.
Well, and it's, at some point you were developing your first multifamily project. Where did you, what credibility did you leverage then before you had these projects under your belt?
At the very beginning, I was self-capitalized, so I
Mm.
didn't have this problem. I started like most people, meaning like I bought a house for myself that I decided to rent out. Then I decided to buy an extra townhome, and then I bought a single house that I added, a secondary suite. I
Hmm.
positioned it in the future to do a coach house. And now I'm looking back, and it's not worth my time to try to build a coach house on a
Hmm.
duplex.
Hmm.
And then bought a triplex and this and then and so forth. So I was self-capitalized, so I built a small track record that way. When it came to bigger project, I immediately onboarded people who had a track record, and then I'm
Hmm.
working with them to make sure that everything goes well.
Yeah, get the experts in there. So,
Exactly.
um, being in Ottawa and making an impact, um, could you give us some insights as to why you chose to focus your investments mainly in that area?
I think initially it's where I was living, right? So that was my
Hmm.
my main thing. When you look at it, everybody will talk highly about the location they invest in. Some people have done real due diligence. Some people believe they've done some due diligence. It's quite an exercise to really break down all the aspect of a town. When you come to Ottawa, I mean, it's it's a city that has an incredibly diversified economy.
Mhm.
We're in Ontario, so it is harder for the landlord and tenant board. So when dealing with the dispute with the tenants and that kind of things, absolutely. But you also have to think every single time something is harder, less people are doing it.
Mhm.
So you can say, hey, I'm going to go where it's the easiest. And then everybody's flooding that place, and then the competition is different. Or you can decide to play somewhere where it's a little harder, but at the
Mhm.
same time, the competition is not as big and your profit can be higher. I
Mhm.
think in Ontario right now, especially, there are certain markets I would stay away. And I'm not saying that they're bad. I'm just saying like they're not for me. Like markets like Toronto, where it's nearly impossible to cash flow, or they're not my market. When you come
Mhm.
to Ottawa, it's very difficult. Uh, but the thing is, if you position yourself properly, you're going to end up with an asset that has high value, that is very stable, right? And that's going to cash flow properly. You just have to play your card right, and you have to leverage your relationships 100%. Otherwise, those deals are not going to end up on your lap.
Yeah, I had a guy on the podcast yesterday, Ontario, and he said it just the same. He's like, risk and reward. If it's like a riskier endeavor, the reward is naturally higher. You're not going to get that like Ontario overnight appreciation in Alberta, for instance. But it's very easy to be a landlord in that sense in Alberta. But are you going to see like a $600,000 jump in your equity in Alberta? Probably not. Is it possible in Ontario? Yeah, we've seen it. We've seen it 2 or 3 times just in the last decade. So yeah, it
It's
might not be easy, but it'll be worth it.
Yeah, and even if you're not looking at the increase in equity, the market is very stable,
Hmm.
right? Alberta is very much an oil-headed province, meaning like most of the economy is around the oil industry. Even now, like they say that they got diversified, but the truth is oil prices went back up and it started again.
Yeah,
You know
life's
what I mean?
good. Boom and
Yes,
bust, a boom town.
exactly. Ontario's a bit more challenging. I think my advice when it comes to Ontario is if you buy an asset, and realistically it's for any province, but if you buy an asset, make sure it cash flows. If that
Mhm.
asset doesn't cash flow on day one when you buy it, you have to have a very clear plan and a very clear timeline as to when this asset will be cash flowing.
Mhm.
So if you buy it up the front and you have two empty units not cash flowing for that reason, and they need to be renovated, and then you'll be cash flowing perfectly fine. You have a plan. It's not cash flowing on day one. You do your plan, which is your renovation, and then once you re-rent in at 3 months, 4 months down the road, whatever it is, at that date you're cash flowing.
Mhm.
So just keep that in mind. The last thing you want is end up with an asset that's bleeding money, because that is, as much as real estate can be fantastic, it provides a service that's needed for people, and it's a great way of investing your money. But if you buy an asset that's bleeding cash, and there's just no way of growing your
And there's no
business.
plan for how to like put the band-aid on it, then yeah, that's not really maybe you've got some like capital, maybe you want to like sit around and like wait for appreciation. Normally when people are sitting on cash flow negative stuff, it's an open variable interest rate or they're planning to knock it down and they have a plan, right? People who sit around with negative cash flow and stuff usually have a plan. So um, let's talk about investor transparency. One thing that's really important for investors I've found and a lot of people have found is like, how do we report the wins and how do we report the losses to our money partners? Because I found that uh, ultimately money partners just want to know what's up. So how is it that you kind of navigate the communication aspect with your investors?
Can you so you're talking
Like
you're referring
you're in a long-term deal with partners and there's a cash call or things are good. How do you stay in communication with the people who've invested with you so that they know what's going on? Because the
of
last
course.
thing, the transparency seems to be most important, especially with the interest rates changing and maybe some deals aren't cash flowing as much as they used to.
Of course. Yeah, I completely agree. So at the end of the day, as part of your operating procedure, you need to have clear communication with your investors on a regular basis.
Hmm.
Some people do it on the monthly, some people doing quarterly. We give a quarterly update on our projects. Um, it's if you paint the real picture when you talk to investors. There's a way to present a conversation, but in no way, shape, or form, I would recommend to anyone to hide the truth from your investors. It's A, dishonest, B, that's going to land you in hot water, C, it's just the wrong thing to do because those people believe in you and they expect their truth. So the least the least decent thing to do is to tell them how it is. But yeah, so we keep them appraised of how the project is going at all times. So if at some point we feel that we're heading towards an increase in cost of construction, for example, and we think it's going to lead to a cash call. It's not going to be, they're not just going to get a phone call and be like, hey, yeah, we messed this up and now we need a cash call. Ideally, you're going to see that coming for a few months. You're going to see your construction increasing or creeping, and you're going to be sharing that with your investors. And then eventually, if it leads to that, then they're not caught by surprise and they know how this works. That being said, if you have the right team in place, you try to you try to plan your project properly, and that circles back to what I was saying earlier. Build important contingency in your construction project, in your development project, in order to avoid those situations with your investors.
So, when you're building new things and, you're expanding 20 units here, 30 units there, it usually means you're going to have to bring in more capital. Now, you said you're working with Victor and his team. What other sorts of things are you doing to bring in new partners or get new eyes on your projects and your company?
So if you're talking in terms of capital raising,
yeah.
As of right now, so our first project is fully capitalized. So it's been fully raised. It's been raised for several months. That being said, the second project, I've put all raise on hold. There's multiple people that I discussed with, telling them I tell them ahead of time I may have something coming up. But as of right now, I did not disclose it to anyone simply because I'm still waiting to see if this project will increase from a 30 to a 64 units. Interestingly enough, I'll know in about 2 days. Once it is confirmed and that if it is increasing, that I have the second lot under contract, then we'll make our plan, and then I'll go see the list of investors and be like, okay, now I have something solid. Here's the data about it. Here's what we're thinking about doing, and show them what we have that way.
So are you bringing in new investors to that list, or do you feel like you've got enough investors kind of waiting in the wings that you haven't had to reach out beyond that list yet?
If we're going in right now, I have enough for the 30 units. If I lead this to a 64 units, it's a good question. I don't know if we're gonna have to reach new investors. It's very likely that we will, yes. So.
Awesome. So if people want to find out more, they want to get connected with you, what should they do? How do they find you?
Yeah, so they can communicate with me in my email address on my website. Otherwise, it's Marc, M-E-R-C, at assera.ca, ASSERA.ca. They can find me on Facebook and Instagram under my name as well. And I'll be always happy to have a good chat.
Awesome. Well, I really appreciate you stopping by and letting people know what's going on in Ottawa.
Thank you very much, Bryce.
No problem. Until next time, guys, we'll catch you on the next episode.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.